everyone! Welcome to my channel, The Aussie Tax Talk. Recently, I came across a newspaper article from Financial Review saying Australia needs explosive surge of 2 million migrants due to the damage of COVID-19 on Australia's economy. Wow, 2 million migrants! Sounds like a huge amount of people coming in shortly. As we all know, Australia is an immigration country where people come and go all the time. I'm sure there will be a lot of people thinking of moving as well. If that sounds like one of you, today's topic might be for you. Hang on, before packing up, have you thought about your finances for the move, especially the taxes between different countries that will significantly impact your bank balance? Apparently, at the moment, Australian tax is sitting at the second highest all over the world. Am I just scare you? Don't be panic, and that is why you need to listen to today's topic and plan ahead. So, first and foremost, to plan ahead, you need to know whether you are an Australian tax resident or not. As a tax resident, you will enjoy various tax benefits and tax-free threshold for your income, which is sitting at your first $18,200 income, tax-free for the moment. Wow, does that sound great? Of course, the side effect is you will be taxed at the second highest tax in the world for your worldwide income. However, if you are the foreign resident, the good news is you will only be taxed on the income you derive from Australian sources, which means if you have income from other countries, you don't need to worry about them. Whereas you won't have any other tax benefit or tax-free threshold, which means you will be taxed at 32.5% for the first dollar you earn in Australia. Comparing to tax resident, that is a lot. Therefore, for both Australian tax resident and foreign tax resident, they have their own cost and benefit to weigh up. However, the Australian Taxation Office doesn't use the same rule as the Department of Home Affairs, which means you can be an Australian tax resident without being an Australian citizen or permanent resident. There are quite a few lengthy tax rules that ATO follows to determine whether you are an Australian tax resident or not. If unfortunately you fall into the category that you are not expected to, that might give you a shocking tax bill at the end of the day. So let's quickly go through the main tests that ATO and courts rely on. First, the common law test of Reside test, which is formed by numerous law cases handed down by the courts. The courts will look at your behavior while in Australia, such as the intention of or purpose of the stay, your family tie, your business or employment ties, maintenance and location of your assets, including your family house, your motor vehicles, and your household belongings, as well as your social and living arrangements, which includes the membership of local clubs, the social sports, redirecting the mails, etc. Your physical presence in Australia is also counted. It's like continuity of your stay in Australia. Your routine and habits are similar to your normal day-to-day life routine, etc. Your nationality normally is not counted into consideration. However, in certain borderline cases, your citizenship may be useful where all other relevant facts are not conclusive. The main theme in the Reside test is the ATO, and courts will look at all your circumstances. Not a single fact can be used to draw a definite conclusion, and everything is in addition to each other. If you think you're absolutely going to fail the Reside test of being an Australia tax resident, don't you worry. There are 3 more statutory tests waiting for you, which will definitely catch you one way or another. The 3 statutory tests are the rules that are made to law. These are domicile, permanent place of abode test, the 183-day test, and Commonwealth Superannuation Fund test. With the domicile test, the first key point we think is whether your domicile is in Australia. Domicile is considered by law to be your permanent home. It can be by origin, like your birth country, where you were born, or by choice, like a migrant choose to change their domicile from their birth country to the country they are migrating to. The test is most likely to be applied to where an Australian resident goes to move to an overseas country. If it's a yes, your domicile is in Australia, then straight away you are an Australia tax resident. If it's a no, then we will look at your permanent place of abode. The key points here we are looking for are your intended and actual length of your stay overseas, including the continuity of the stay, existence of an established home overseas, the existence of residence in Australia while you are overseas, and your family and financial ties, etc. If you are moving constantly between countries or moving constantly within one country while overseas, you are more likely to qualify that the permanent place of abode is still in Australia. Then obviously you are still an Australia tax resident. Okay, you say you have failed both common law test, the Reside test, and the first statutory test, the domicile test. There is still 183-day test waiting for you. Under this test, if you are present in Australia for more than half the income year, whether continuously or intermittently, you may be said to have a constructive residence in Australia unless it can be established that your usual place of abode is outside Australia and you have no intention to take up residence here. There is a common misunderstanding in this area that if you stay in Australia less than 183 days in a tax year, then you don't need to worry about the taxes in Australia. Is that true? In the case of ZKBN and Commissioner of Taxation 2013, the applicant declared that he sought and obtained advices from various sources saying as long as he was outside Australia for 183 days in a tax year, he did not have to pay tax in Australia in that year. However, the court has proved that claim to be invalid, which gave us the alert to be super cautious in this area. Also, we need to be aware of this test only applies to individuals arriving in Australia. The last statutory test is called the Commonwealth Superannuation Fund test. This test applies to Australian government employees working at Australian posts overseas. This test is rarely to be applied, and hence we won't go into much details here. Okay, that is the end of our tax residency topic part 1. In part 2, we will talk about 2 examples to see how these rules are in play. Thanks for watching, and if you enjoyed it, please give me a thumbs up, subscribe to my channel, and click on the notification box so you won't miss my next video. Catch you next time. Here comes the disclaimer. Taxation determinations will depend on your individual circumstances. This YouTube channel is only for general knowledge sharing purpose. Please do seek professional advice before making decisions.